bullion banks are long silver again. And when bullion banks are net long silver, that tends to signal an intermediate bottom as it has since 2018. We saw a very high volume update in the leveraged gold and silver mining ETFs, which also generally signals an intermediate bottom. What I'm looking for in a miner personally is fiscal responsibility, the ability to weather the worst circumstance, which can sometimes happen as we go on the cusp of hyperdeflation to hyperinflation to hyperdeflation again as we go through financial crises. What I'm looking for is a company that can handle all of that.
Rafi Farber, guided by the Austrian Business Cycle Theory, applies its insights to his investment choices. The historical signal of bullion banks favoring silver gains weight as Farber expresses confidence in its future. Pan American Silver said its silver mineral reserves increased from 515 million ounces to 577 million ounces, net of mining depletion, adding that gold mineral reserves increased from 3.6 million ounces to 12.9 million ounces. On the other hand, Farber emphasizes the importance of mining stocks like Fortuna Silver Mine during economic uncertainty, especially currency decline, due to their direct tie to precious metals. Mining stocks offer a convenient avenue for exposure to commodities without holding physical metal. A surge in gold prices can lead to increased profits for gold mining companies, aligning investor gains with rising commodity values. As per Farber, gold and silver miners hold tangible reserves, distinct from fiat-based bullion banks, while shaping hyperinflation-deflation dynamics. As inflation rises, fiat currency value goes down. Investors look for alternative safe haven assets. Gold, silver, and platinum offer protection from inflationary pressures, historically seen as stores of value in uncertain times. Scarce and tangible, attractive to investors. Meanwhile, the US dollar index, which weighs the greenback against a basket of other currencies, has declined 4% over the last year, signaling the dollar's decline in purchasing power. Interest rates in the economy are also at their highest level since 2001 as the Fed continues to monitor high inflation. Farber's analysis underscores the importance of increased volume in the JNUG Gold Miner ETF, often linked with mining stock intermediate bottoms. The mid-tier and junior gold miners just finished reporting their latest quarterly results last week. These fundamentally superior smaller producers are in the sweet spot for upside potential in major gold uplegs. And indeed, their Q2 '23 operational and financial results proved much better than their larger peers. Now we are presenting you the glimpse of Rafi Farber insights from his recent video at Arcadia Economics. Before we continue to delve into this discussion, we request you to subscribe to our channel and activate the bell icon for timely updates.
As always, this silver report is brought to you by Fortuna Silver Mine, symbol FSM. And nothing new has been going on with Fortuna since last week. So I wanted to get into a little bit of the general reason why you want to hold some miners, why I want to hold some miners in my portfolio, and why I do hold some miners in my portfolio. And you can take this as what I do personally for myself, because I don't give advice, because as we know, advice is illegal. So sometimes we can get caught in the minutia of ups and downs and technicals in the mining stocks. But basically, how do I keep calm when a mining stock falls? Well, first of all, I have physical gold and silver tucked away in different places, and that always keeps me calm. But with the mining stocks themselves, how do I keep calm about the prices of the mining stocks that I own themselves? Well, think of it this way. When hyperinflation hits and the dollar does die, and we know that it absolutely will, because that is the end of every single fiat currency that has ever existed, and this will be no exception. When that does happen, the only companies with a stock of money to use to buy things, or not the only, but the major asset class of companies that will have a stock of money to buy other assets, will be the gold and silver miners. That's who will have the money. And why won't it be the bullion banks? Because the bullion banks are based on fiat. They're not based on gold and silver. They are fiat currency banks, and they need to pay their dollar debt. So they will continue with the dollar until it is dead. They will not be stackers to the end, even though they have a lot of gold and silver now. They will not continue to through the end game. The only companies that will are the ones with gold and silver underground, which are the gold and silver miners. And once that happens, there is no telling what they can take over, what assets they can buy for a very little amount of gold and silver, for a very little amount of real money. And so basically, what I'm looking for in a miner is not necessarily technical signals, which I do follow and which I do believe have some real significance. Continue here. We have a very high volume up day, and the most leveraged gold miner ETF, that is JNUG, that takes the junior gold miners, which is already leveraged against gold, and it triple leverages them with derivatives, with options. I don't recommend buying this fund. This is for crack addicts. We don't want this. I'm just using it as an indicator here. And we see here in the blue lines that the volume here, I've touched a red line to this volume line here for the weekly volume, or is it the daily volume? This is the daily volume, actually. And going back the last 6 months, only once has it been exceeded. And when was that exceeding? That was in early March 2023 at this intermediate bottom over here. And from there, where did we go? We went to, from 28 to 52. That's almost double. I'm not saying that is exactly going to happen this time, but I'm saying that high volume up days, which hasn't happened since here, are very often correlated with intermediate bottoms in mining stocks.
During the interview, Rafi Farber highlighted that when bullion banks are net long in silver contracts, it often aligns with intermediate price bottoms. The World Bank's Commodity Markets Outlook in October 2022 saw the silver price averaging $21 throughout the year and staying constant at the same level throughout in 2024. Farber mentions the Nasdaq breach and the significance it holds for the tech sector. He suggests money withdrawal could relate to shrinking money supply. An economic downturn in 2022 dragged down countless stocks, with the Nasdaq Composite tumbling 33% throughout the year. However, the market has enjoyed a solid recovery in 2023 alongside easing inflation. The index has climbed 29% since January 1st. Let's get back to interview.
What has been happening this week? Well, we see that tech, the NASDAQ composite, which is the main bubblicious indicator, well, it broke through the 50-day moving average back in early August. It is retesting the 50-day moving average this past weekend. It has failed exactly at the 50-day moving average and closed at the bottom, or I think below even now. This is a one-day-old chart. Well, by the time you're watching this, closed at the bottom of the weekly candle. This is a very bearish indicator for the tech stocks. It looks like money is being sucked out of tech because, the money supply has been shrinking for over a year now. It's about time that this infects the capital goods industry, meaning tech stocks. And now a quick lesson in eligible versus registered supplies of silver. We're going to use Brinks, and I brought this up last week, but we're going to look at the difference between its eligible stock and its registered stock. Registered for sale against futures, that is for sale in the futures market. Eligible is not. We do not know who owns this stuff exactly. We do not know why they own it, but all we know is that it is not for sale. It's just there. Okay, so we go into BRICS and we see here that since the beginning of maybe, I don't know, this is an all-time chart and I can't really zoom in, but let's say May 2023, like a few months ago, we were over here at around 16 million and now we're at 32 million. So the eligible supply has doubled since, let's say, May. So that's like 3 months. 3.5 months or so, and you say, oh my God, there's so much silver in Brinks. Oh wow, look at that. But look at this. I mean, this is also Brinks. This is the registered supply, and we're at 4.437 million. See over here, the number is 4.437 million, and this is an all-time low. So we were at an all-time high in eligible supplies, but an all-time low in registered supplies. Now the question is, why do the people who own this silver in the eligible category, why don't they want to put it for sale and registered? Well, let's ask them if we can find out who they are. But for some reason, they do not want to sell their silver. Eligible means they're stacking. Now, this chart I conjured from Y charts, and this is on top. We have the spread between long futures in the swap deals. The swap deals are the bullion banks. The longs minus the shorts in silver futures by the bullion banks. Now, when the bullion banks are long, that usually signifies an intermediate bottom in the silver price. We've seen this 4 times since 2018. Here is one. This is the most recent. we saw here that they went net long. This is the zero line. This black line is the zero line. The bullion banks went net long in their silver contract holdings in, what is that, early 2023, right? And that coincided with this little intermediate bottom here. And I think that was March 2023. Here was the intermediate cycle low, or the yearly cycle low, or whatever the technical people want to call it, in September 2022, when silver, I think, went down to 16 or something like that. And we saw here the bullion banks were even higher net long than they were here. And this is even lower low. We see it back here in 2019, mid 2019, about, when the bullion banks were net long over here, and there was an intermediate bottom over here, and also here in 2018, another intermediate bottom over here. So not every single time, but this is a very reliable indicator that we are at or near an intermediate bottom. So yes, this is a very reliable indicator that the intermediate bottom is either here or very close.
As inflation persists and fiat currency value diminishes, tangible assets like gold and silver may gain appeal for safeguarding wealth in uncertain times. Their historical reliability could make them even more enticing to investors aiming to preserve purchasing power. Considering the evolving economy, how might the enduring resilience of gold and silver shape your investment approach? Share your thoughts in the comment section below. If you find this video informative, don't forget to show your support towards our channel by giving this video a thumbs up and subscribe to our channel, and turn on notifications to stay informed about our latest videos covering more interesting topics. Thank you for watching.